Akintoye Oyelaku is an investment analyst at Cordros Securities, and he joins us now. Thank you very much for joining us. Good morning, Akintoye. Good to have you on the show.
Good morning. Thank you.
So Nigeria's debt to GDP ratio increased to about 21.6% in 2020 from 18.8% in 2019, while debt service to revenue ratio worsened to 83% in 2020 from 50.7% in 2019. What is your take on these statistics?
Oh, well, thank you. So the major contributor to the growth that we saw in debt profile for the country has been the COVID-19 induced borrowing. So due to the emergence of COVID-19 and the negative impact, we saw Nigeria borrowing, increasing borrowings both locally and externally to support the economy amid the negative impact of the virus. So also, when you consider the fact that in 2019, the exchange rate at the official window of the CBN was 306 naira, it increased to 379 naira to the dollar in 2020. This also led to the increment that we saw in the external borrowing, which also shrank down to the total borrowings of the country. Again, looking at the debt to GDP ratio of 21%, this is still far below the IMF's sustainable threshold, which is at 40%, indicating that Nigeria is not optimizing its borrowing at least in 2020. Looking at that data, however, when we consider the debt service cost to revenue for 2020, also it stood at 83%, which implies that out of every 100 naira that the federal government generates, around 80% is used to service debt, which also implies that Nigeria's ability to fund capital expenditure is very weak, and our growth potential will still remain very weak, at least in the future, in the near term. So looking at this, the basic fact is that Nigeria needs to expand its revenue generating capacity in order to be able to optimize the borrowing threshold set by the IMF.
So you talked about the IMF forecast, which they moved from 1.5 to 2.5. But what would this rising debt mean for Nigeria's growth trajectory?
Well, what it simply implies is in order to be able to sustain capital expenditure, we may need to resort to borrowing. But with the level of revenue that we have, it's currently weak. Even at the 21.6% debt to GDP ratio, being able to finance this debt conveniently has not been easy. So the major factor here is there's a need to expand this revenue generating capacity through policy reforms, which could drive in investment in those critical sectors of the economy.
Now, the IMF projects 2.5% growth rate for Nigeria. How much of a confidence booster is this for the much-needed investment inflows, and what could be the downside risks to this positive revision?
All right, so the basic revision came as a result of the rate of vaccination. Looking at what the projections for the world was in January, during that period, we haven't seen much of this rate of vaccination. However, with recent data, we have seen that across the world, especially in the Europe region, we are seeing a lot of vaccination going on there. Also, looking at it by country, Israel has vaccinated the most people per 100 citizens, while the US is also trailing. Also, considering this, the global data, with the level of fiscal stimulus that the US has approved, $1.9 trillion. This will also go a long way to support the global economic recovery. Although Africa is still lagging, we are still seeing that the rate of vaccination has continued to improve. In Nigeria, about 4 million doses of vaccination has been secured. However, looking at the fact that in the fourth quarter, despite the challenges of the COVID-19 pandemic, Nigeria managed to recover from the recession by growing by 0.11%. So this trend is expected given that the COVID-19 restrictions have been eased relative to most of the 2020 period. So we believe that on the back of this, we are going to see sustained positive momentum, especially as The global market has continued to show signs of recent. In Europe, we have seen increased manufacturing activities, while in the US also demand for commodities are sustained and improvement. So on the back of this, the oil market will likely see recovery in the near term, while the non-oil sector will continue to remain resilient. So based on this, we are predicting a growth of 2.75% for Nigeria in 2021. This is slightly above 2.5%, but we still believe that the 2.5% is likely achievable by the country. Also, looking at the downside risk to this projection, given the fact that vaccination rate is still very weak, we might not see enough vaccination go on in the near term. So this might affect the potential for Nigeria to reach this growth projection. So basically, leaving the downside risk apart, we believe that with the current trend, if the current trend persists, Nigeria is certainly going to be able to achieve that growth projection.
Well, interesting. I mean, even as Codros, your projection is higher than that of the IMF. And I know our guest on Monday had said 2.54. Well, we'll see how that goes. But on the debt issue now, the ongoing IMF World Bank spring meetings, the issue of extension of debt servicing under the DSSI was talked about. And is Nigeria part of this? And if so, how will it benefit the country?
All right, so the purpose of this DSSI agreement is just to help low-income countries, of which Nigeria is also part of. And this will help to ease the burden or ease the financial pressure on the country, given that in 2020 we saw a significant increase in the level of debt borrowing, both locally and internationally. Based on the estimate for 2021, Nigeria is budgeting around 3.1 trillion for the servicing of debt. And given the fact that around 40% of this debt is from external sources, and the IMF and the World Bank form a large chunk of the external borrowings, we expect this to be very positive for the country's external reserve. We believe that given the fact that the external reserve has been very much weak amid low oil pricing, so we believe that this news will be positive for both the external reserve and also the financial status of the country, and it will help the country to focus on other critical sectors to recover from the impact of the COVID-19 pandemic.
Let me take you back to the growth projection. Yeah, quite optimistic there by the IMF and, of course, Codros. But then the IMF raises another concern about the unequitable distribution of the vaccines. Yes, we know that the vaccines are being, distributed, but then there is this concern of a lot of people not getting it, a lot of countries. For instance, you did mention African country and indeed here in Nigeria. And of course, this morning we saw the news, of course, EU medicines regulators and even the UK, find possible link between AstraZeneca COVID vaccine and blood clots. And of course, this raises some kind of worry for people, a lot of people who are even skeptical about taking this vaccine. For you, as an investment analyst, for you looking at the market, is that a concern, or should that be a concern for us here in Nigeria? I mean, the vaccine we have here is AstraZeneca.
Yeah, of course, the news is a negative one, and it will definitely have a negative impact on the rate of vaccination across the world, given the fact that AstraZeneca is one of the leading vaccines in the global space right now. But however, in Nigeria, we have not yet seen a lot of complaints about this discovery about the COVID-19 vaccine. But what it means is that Nigeria will have to look for alternatives. If you want to recover from this pandemic, we should look for alternative COVID-19 vaccines to be able to boost the recovery from the negative impact of the COVID-19 pandemic.
Okay, so the DMO has just released the bond auction calendar since the last auction. The financial market has sustained bearish trend following the uptick in the average stop rate. Both the equities and the domestic bonds market closed bearish last week, while the money market recorded moderate gains. What is your assessment of the markets in the first quarter that just ended and your outlook as we begin the second one?
All right, so in the first quarter, despite the dovish stance by the monetary authority, we saw that at the auctions, yields trended higher, and this drove the bearish sentiment across market. We saw a repricing of yields in the fixed income space, especially due to the increase in the stop rates for the money market. So till now, we have continued to see that sustained upward trend in the yield environment, and this has made the fixed income space more attractive. While the equities market, although it recorded gains in the first month, that was on January, it has suffered losses in the subsequent 2 months. So the equities market was slightly bearish in the first quarter, while the bond market also recorded bearish performance due to the repricing of yields amid increasing stop rates in the money market. So in the second quarter, we expect the performance to still remain relatively the same. We expect yields to continue to trend higher. However, the major factors that will shape the performance will be what the outcome of the auctions are. If yields continue to trend higher in the primary market, we expect the secondary market to reflect this. Overall, we expect the yields in the fixed income space to continue to increase, while we expect the sell-off to continue for the equities market. However, what this means for the equities market is that it creates an opportunity for fundamentally sound stock. Investors could position a fundamentally sound stock that are expected to perform well in 2021 and beyond, due to the fact that the lower the pricing of these securities, the more attractive they are, that dividend yields is going to be.
Thank you very much, Akintoye, for sharing your time with us this morning. We do appreciate it. Thank you. Enjoy the rest of the day.
You too.
Akintoye Oyelaku is an investment analyst at Cordros Securities.